So how you doing, buddy?
I'm doing pretty good. It's been a good week. It's good to be back chatting up finances with you. It has been a while, but kind of busy. Just with work, things have been a little crazy the past week, just with a lot of deadlines and stuff trying to meet. And then we've just had some people transitioning in my team. So, same amount of work and less people. So gotta get it done. And then personal note, for those of you that don't know me super well, I'm a big Phoenix Suns fan. And for those that don't know, that's a basketball team. And so, thank you. And so it's been exciting. I'm representing today for those that can see the video, wearing my Phoenix Suns shirt. And it's been exciting because I've been a fan for like 10 years. Really following the team for 10 years. And this is the first year where we have made the playoffs. So it was like a big milestone. And we're like the number 2 seed in the West out of 8. So, it's not like we barely snuck in. We did really well. Only to then we ended up matching up versus the defending champs. So it's a little bit of a bummer. I had high hopes and was trying to have a lot of faith that we would have a chance. Currently, we're losing. So it's a best of 7 series. And we're down 2-1. So, and it's not looking great. One of our better players has been injured. So I'm just trying to enjoy the moment that I get to watch my team play in the playoffs, regardless of the outcome, because it's not looking great. So it's kind of disappointing. It's like I've waited 10 years only to have us, do really well and then get to the playoffs and then probably lose in the first round. So
right.
So yeah. That's pretty much my week.
I gotcha.
What about you?
I understand in sports, like my knowledge of basketball is about, my knowledge of crypto, which is like non-existent. Yeah. But I'm a huge football fan, college football fan. So I understand because I'm a huge Georgia Tech Yellow Jackets because I went there. And same boat. It's fun to see us every 10 years, play a bowl game or something. And usually we lose. So I can understand that feeling. I don't understand the basketball, but I understand the feeling. So
yeah, it definitely hurts because it's like, your team finally made it pretty far, only to then face the one team that's probably going to beat you. So yeah, it's kind of disappointing, but hey, life happens. So. There's always next year.
Well, we didn't record last week because 1, you were super busy, and 2, I was not super busy. I was on a little vacay with my wife's family, so my excuse is I was being lazy and
which is fair.
Looking at the lake.
Yeah, which is fair.
It was nice. I enjoyed it. We got a boat over on Lake Lanier. And so I actually live pretty close to Lake Lanier, but her family doesn't. And so they come kind of this way. So it's only 30 minutes away from the house, but it was a good getaway. So really enjoyed that. And let's see what else new this week. Oh, I got my favorite hot sauce. I finally found it at Aldi because that's where we shop. For those that don't know, I love Tabasco chipotle, and it's William that actually introduced this stuff to me.
You're welcome.
And I've been trying to find it everywhere, and we finally got some. So
now that you care about our food opinions, but it's just low key a great sauce. I found it at Chipotle. That's usually my go-to because they've got the different Tabasco sauces that you can grab, and so that's usually my go-to is getting the Chipotle Tabasco. It's just a nice smoky flavor. So Cody and I joke sometimes that like you could get cheap food and you throw some good hot sauce on it and it suddenly makes it better. And it's not super hot. It's more of a smoky sauce than anything. So it just makes okay food pretty good. So yeah, if you want to go cheap, just throw some of that sauce on it and it's really good.
Yeah. If you're trying to budget, pay off some debt, save or whatever, and you're just doing beans and rice, this is worth the $1 or the $1.50, whatever it is.
Yeah,
and put that on your beans and rice. It makes it like a whole new thing. It's amazing. Yeah, eggs, whatever, sandwich. I put it on my fries last night. So
wow.
I mean, it was actually really good. So
yeah, it's good stuff.
Yeah, a little money saving tip there. Go get some hot sauce.
Yeah, it's good stuff. There's other good hot sauces too, but yeah, that one's just really nice, like smoky. So yeah, we put that stuff on everything.
Yeah. So anyway, so during the week while I was on the boat, I was looking at Reddit and our my Robinhood account, just kind of looking at, because last week we talked a little bit about our crypto investment strategy, which is, a little bit, if you want to understand that, or just go back to our last podcast where we talk about what our strategy is for that, our opinions about crypto and such. But I like keeping up with it. I like looking at it, and the market just seems down. So on a lot of the subreddits that I follow, they keep saying things like buy the dip, buy the dip, buy the dip. And so I thought that'd be a really good topic to talk about. Is that a good investment strategy? Something that not just for crypto, but just for everything. And then also the term HODL, which I don't understand the meme for that, but I believe it means hold. And I don't know why it's called HODL, but it's all over subreddit. So
yeah. I think, wasn't it Elon that misspelled it? I think he meant to say hold.
I think so. He seems to be connected to just about everything.
Yeah, somebody was like
related,
trying to say hold and misspelled it. It's classic. Like,
it's stuck.
Seems like it's happened before where a politician or somebody will mean to say something and they'll misspell it, and then we just say it like that.
Yeah. I saw it on a tag, just HODL and like some numbers.
Yeah.
So it's
so hold. So yeah, a lot of different things going around now. So that would be a good thing to talk about. As far as buying the dip, the logic there is, if you're looking at a stock chart, or mutual fund or Bitcoin or different crypto, whatever you're looking at, and the chart kind of has its ups and downs, and so whenever it goes down, we call that a dip. So it goes, dips down. And so the idea is to try to buy whenever you see those dips, because then, if you think about it, it's cheaper. So if you had a stock that was, or something that was trading at $100 and it goes down to 70, well, now it's $30 cheaper. You're getting the same thing. It's still the same stock, same piece of a company, same piece of crypto, whatever it is. But now you're buying it for cheaper. So that makes sense, right? Like if you go to a grocery store and you see that, your favorite cereal is on sale, you're going to be more aggressive at buying it because it's like you're getting the same great cereal, but for cheaper. And so it's the same, logic for that of it's kind of like everything's on sale when it goes down. And usually we don't look at stocks that way. Usually we freak out when things go down. But the logic behind that is just, hey, it's just on sale. Like it's just down right now. So why not buy some? And then hopefully, it goes back up. And then hold, the whole thing with that is, it kind of goes both ways of if a stock is doing really well, sometimes people want to sell out of it and just like take their gain. So if they, made 20, 30%, whatever on it, they're like, I just want to get out. Whereas some of the other things, people are like, just hold on. I think that really started with like GameStop and AMC and all that. They were like, don't sell just because you're making money, hold for the long term. I think they were trying to send a message with that. And then also on the flip side of that would be, if a stock is not doing really well, sometimes out of fear will sell, just be like, oh, is it going to go any lower? And so I'm just going to sell it. That way I don't lose any more. And so that's something we'd want to avoid as far as long-term investing. If we really believe what we're holding, why would we sell it for less if we think it's going to come back and grow and, do well? So it's kind of like you don't want to jump ship just because it's going low. It's like that's more of just a discount. You should buy more. And so you should hold on to what you invest or add a little bit more into it rather than just selling out of fear because it's going lower. So I think that's the thoughts behind those. I think it really just depends on what you're investing in, what you're buying the dip on, or what you're holding. That will depend it. And then, what's your intention behind it? Are you just trying to make a quick buck, or are you trying to invest, long term with that? Does that make sense?
Yeah. As far as where it translates into kind of the investing we do, hold is our strategy. We hold forever.
Yeah, we like holding. Yeah.
We like holding because the idea is, we don't day trade. We're investors. We're looking at the 10 plus, 20 plus years. And when it comes to retirement, we're looking at, 30, 40 plus. So yeah, HODL all day.
Yeah.
When it comes to the subreddits, the memes, everything like that, I think you were right with like the GameStop stock. It was to hold for that message. It was like, hey, don't have fear, keep holding, and we'll get there one day. As far as for us, I mean, that is the strategy. Now, when it comes to buying the dip, I think it's a little bit different because we teach, dollar cost averaging. And so you're kind of buying the dip anyway. You could be buying it high, you could be buying it low, but it's that average. And we've talked about this on previous podcasts. But I don't see why it's not a bad strategy. And I actually do this myself sometimes, is if something does go really, really cheap, and it's something that I do believe will be going back up, then yeah, it's kind of like when you're buying groceries. For me, it's like you got to buy groceries every week or every month, whatever you do at a regular basis. But let's say you see, your favorite cereal, they brought Waffle Crisp back, which I'm hoping they'll do one of these days.
Someday.
Then I'd probably buy a couple extra boxes, right? Because hey, it's on sale. It's something that I'm not going to get a lot. This is a good opportunity. However, if that's not in my budget, I don't need to be doing that. And so I think one of the problems was with the GameStop thing, where people were saying buy the dip, or even now with crypto, some people are saying this is the opportunity. You need to pull out of all your savings. You need to pull out of everything so that way you can become a part of this great sale. And, think of it like the Lamborghini that's 90% off. Well, I still can't afford that, right? It's a great opportunity, a great deal, but I shouldn't be selling everything and pulling out of my savings, everything for just because it's a good deal, right? So I think we need to have a little bit of a balance to, maybe buying the dip is okay. I've done it before, but it was because I had some extra funds available to do that. But that is not part of my overall investment strategy. I just buy at certain intervals consistently. And if there is extra money and if there's an extra opportunity, yeah, I'll definitely try to get some on sale. But when it comes to that long term, that 10, 20, 30 plus years, I don't think, and you can correct me if I'm wrong, I don't think it's going to change that much. It may be a little bit, but it's not going to change that much at what that growth is going to look like in the long term.
Yeah, it's not going to affect it too much. It will have some positive effects, but the only thing is we always talk about timing the market. It's been the thing for forever where people are trying to time when's a good time to buy, when's a good time to sell. It's like the age-old question that we're still trying to figure out in finance. And so I think sometimes we could focus on that too much, where instead of investing, so say I'm setting money aside to invest, instead of actually putting it in, I'm going to say, well, I'm going to wait to buy the dip. And then we wait and we wait and we wait and we wait and we wait. And then we're like waiting for this perfect opportunity to be able to invest. But what happens is we miss out on some of the growth that happens during that time because we're waiting for this right, perfect time to invest. And so I think there's a balance that comes with that. That's why I like dollar cost averaging, because it's very routine. You just do it every month or every week, whatever your interval is, and you're just investing regularly, and you kind of can take advantage of that. Okay, if the price goes down, you're still buying, and if the price goes up, you're still buying along the way as it keeps going up, or vice versa. And so it's a good way to instill a habit of just regular investing. But I think on top of that, as you mentioned, there is some room where if you have some extra funds that you're kind of setting aside and you're just waiting and you just see, oh yeah, I was going to invest, but it looks like it went down a little bit, so I'm going to buy some. There is some opportunity for that. I just say we need to be careful that we're not trying to time the market all the time, where you just have stuff sitting in cash for a year because you were waiting for the perfect time to invest. And there's a stat out there, and I apologize, I don't have it off the top of my head. But it's, based off of if you missed a certain number of big growth days in the market, how it would affect your yearly return. And it's kind of crazy to see that sometimes the returns in the market are only a few days throughout the year, where the majority of the growth is. And so the logic is if you miss those days, then you're missing most of the growth of that year. So the principle usually with that is it's about time in the market, not timing the market. So you're not trying to find the best time. You're just trying to just get your money into the market so you don't miss any of those big growth days. Because yes, you may have an opportunity to buy some stuff cheaper if you wait, but there's a large chance you're going to miss some good growth because you didn't want to invest right then. And so I say just the routine of dollar cost averaging is a great way to go. And then if you want to do a little bit of, buying the dip on top of it, if you have the funds available, like I think it's fine. Like I'm doing a little bit right now where I have a fund that's set up and I've been investing in that. And I have an amount that's going in regularly, but then I have a little bit above that that's kind of sitting there, that's just kind of built up. And so it's like, okay, for that, I'm going to invest regularly. But also, if I see an opportunity to buy something that's cheaper, sure, I can go ahead and use those funds for that. But I'm not holding everything to the side waiting for that perfect moment, to invest. Because I think, you're never going to know when the perfect moment is. The market can always go up and it can always go down. So I think a good consistent strategy is the best way to go for that.
Absolutely. Yeah. I mean, and it also, I think, depends on what it is. Because for right now, a lot of people, it's Bitcoin, Ethereum, all that stuff, the cryptos. And, the likelihood that they'll go right back to where they were a month ago is probable. I would say that it's probably going to go back up. So buying that dip, it makes sense. But like if you're talking about, an ETF, like, or the S&P 500, an index fund or something like that, it might really not be worth your time waiting for that anyway. And like you said, you're going to miss a lot of growth. And so, with something like that, I'd say just keep your dollar cost averaging. But when it comes to, say, like a stock, and it's, say, like a penny stock, and it's not doing very well, and you may think, oh, I'm going to go buy the dip. That may just be a bad stock.
Yeah.
I mean, correct me if I'm wrong here, but like the dip may be for a reason, right?
Yeah.
And so
totally true.
It needs to be in stuff that's like, that is going to come back up, and that this is just the market. This is just a situation. Maybe it's the government. Maybe it's some outside. Maybe it's just a correction in the market that has caused it to go down. Maybe something happened in the business, but it's going to go right back up. No big deal. But there's some bad companies and there's some bad crypto. So maybe be careful in noticing that maybe it's not dip. Maybe it's just a bad investment.
Yeah, absolutely. Because I think that you do have to be careful with that. And I think you said that really well. Because we'll think sometimes everything goes back up, but it's like it has to be a good investment to be, grow in the long term. So I think we can get this mindset of, okay, I've got this penny stock or whatever. And maybe I bought it, it's like 10 cents and I bought it. And now it's down to 5 because they're going to be filing, for or they didn't hit their revenue targets at all and they're losing money for 5 years straight or whatever. But you're like, ooh, I'm going to buy the dip. And then the company just goes out of business later. It's like, okay, that wasn't a good value to buy low. Like if it's, I'm going to go back to the grocery store example. They as things get closer to their expiration date, they're possibly going to come cheaper. But if it's moldy and expired, yes, it's going to be cheap, but that doesn't mean it's a good value to buy it at that low price. You know what I mean?
Mm-hmm.
Like, yeah, it can't be like, oh, this is bread that's normally this much, but since it's moldy and expired, I'm going to buy it at low. It's like, no, you wouldn't. It's not worth that. It's old. Right. So it's like, I think when me and you talk about it, we're talking about things like, good index funds, mutual funds. If you want to do some, other investing, if you're confident in it, and you've got diversification of that, I think that's fine. But if you're trying to speculate and invest in, little things that you think are going to do well, be careful that you're not just buying something that's just not good. That's why it's cheap. It's because everyone else is getting out because they know it's not a good investment. So it doesn't always mean, I don't think you should always buy the dip. I think you should buy the dip on things that, you really think their value is higher. It's just low right now. So why wouldn't you buy it? But things that are terrible, of course, they're going to be cheap. Like everyone else is getting out. So it's not necessarily the time to jump in and, want to pour a bunch of money into it. Cause they could just go out of business. Like it's, it could just be a bad stock. So yeah, that's a great
just
point.
Do the research on why there's a dip in the first place. Because a dip, like you said, could be the market, or it could just be, something that it's like a bad company or it's a bad investment. There's a reason for the dip, right?
Yeah.
So, and this could apply to like the housing market, maybe it's in just a certain area that houses are cheaper, right? And then you may say, well, maybe I should, buy an investment property. But like if it's because a really bad business that's nearby that's polluting the area, like it's probably not a good idea to buy that, right?
It's on a fault line or something,
Exactly. Like, there's like a pipeline leak or something like that. And you're like, there's a reason people are moving out. Maybe I should look into that, So that kind of think of it like that. And so, dip is not always a good thing. So do some research. Is it good buffalo dip or is it expired salsa? Like,
yes.
It's just because it's dip doesn't mean it's good dip.
Yeah. I saw, this is super random. But I love this commercial. I forget what, somebody will correct me, but I forget what, broker it was. I think it was like E-Trade or something. And they were like trying to sell their professional services for like, financial advising, and investment, advising. And it was basically like the scene in the commercial is an auction, and it's basically a bunch of people bidding on like different types of chips and dip. And so there's like raising up like, I've got this dip. It's like, okay, I'll pay this much. And so the end of the commercial is like, if this is what you think when you hear buying the dip, then you probably need our help. And so they were offering that. But I love that commercial so much because it's like,
great.
Yeah, if that's what you think when you hear buying the dip, it's like, that's not what it is at all. Right. So it just made me think of that commercial. It cracks me up every time I see it.
That's great.
But yeah, so that's not what we mean when buying the dip. We're not talking about that.
No, that's amazing. Yeah, if you want to make the dip good though, get you some Tabasco chipotle sauce.
Just throw some of that in anything.
Throw some of that in there.
It'll be great.
It'll be amazing.
Yeah. So I think overall, I don't think buying the dip is bad if it's in good, if it's in a good investment. I just think make it simpler on yourself. I think dollar cost averaging is a great way. And then if you've got some extra that's kind of sitting there that you were meaning to invest and you see something is cheaper, like I've done that before. Like I had some money and I was like, oh yeah, I've been meaning, I think this, I'll be able to set this aside for investing. And then I just noticed that something I was going to put it in, went down to a reasonable price. It's like, okay, might as well just buy now, just to get into it. Or if I already have some investment into that and it's, buying low, sure, or going low, sure, I'll buy some more of it. So I think that's fine. I would just be, I think in moderation, don't be holding all your money in cash waiting for this dip to buy, because you're never going to know when the bottom is and you're never going to know when the right time to sell is. It's just unfortunate. So I think it's better just to have your money in the stock market than trying just to time it all the time.
Right. And I would be careful about, trying to hop on a bandwagon, use the idea that, if you're hearing about it, it's probably too late. So if everybody's trying to say you need to buy the dip on Dogecoin, you need to buy the dip on GameStop, whatever it is, be leery of that. Is it the market? Is it maybe it's a bad investment? Just be leery about what you're doing. And there's nothing wrong with throwing a little bit of extra cash that you have available that you budgeted for. Go for it. It's no big deal. But, don't take out of that 15% of your retirement into something like just because there's a dip or just because there's, this meme stock or some sort of movement. Try not to do that. I don't recommend that.
Yeah. Or those, people that go into big debt trying to leverage it. I think it works out for some, but others it's kind of scary. Taking out debt to take risky investments that you think are going to.
I've heard a lot of taking on a home equity line of credit last year when the entire stock market was down due to the coronavirus, and a lot of people did that, got a HELOC, and then invested that money. And I know some that did really, really well, but again,
be careful on what you're investing.
Yeah. I mean, you have no idea, especially with the coronavirus. We had no idea what was going to happen. It could have been a lot worse than what it is. And so you could have lost everything. And now you've got, to pay more towards your house. So,
right. Could end up worse. So, that's why I like a good conservative approach, consistent over time. And again, long-term, keep a long-term view. So many times we're focused on the short-term up and down. If you just talk about the S&P 500, you notice if you look at it during a day or a month, you've got these short ups and downs. But if you look at it over 5 years, it just goes up. You know what I mean? So it's like, if you look at it from that perspective, it's like, okay, this little dip isn't really as big as like, if I just hold it, this is the growth that I'm going to see. So focus on that instead of the long-term value that you think going forward. And then it's the timing of when you buy doesn't matter as much. When you look at it from that long of a perspective.
That's just when you're trying to like get an edge, just a little bit extra. If you can, there's nothing wrong with it. My financial advisor last year, when the entire market crashed because of COVID, called me and said, "Hey, do you want to throw in a little bit extra into the IRA just because everything's on sale? Do you want to?
Well.
Is that available? Can you afford that?" And we were like, "Sure, we could throw an extra couple $100. No big deal." And it's like, cool, let's do that. And then like recently with this whole, crypto crash, I was like, sure, I can throw another $10, $20 into Bitcoin or something like that. Not a lot, but something, just because I had the money available. I'd sold something. I was like, I might as well. So, stuff like that's okay. Just, be careful and know that dollar cost averaging, long-term holding, long-term investing, that is ultimately the goal. And just buying the dip, all this kind of stuff is really just a little bit extra, but not enough to make that the main focus.
Yeah, it's not your main strategy, but I think it can help in, if it comes up situationally where you got a little bit extra, you want to throw it in, sure. But I'd say consistency is, in my opinion, is a better approach. That way you just, you don't miss out either way.
Right.
And you don't have to worry about when you're buying. It's just routine. You just buy consistently.
Yeah.
And then it works out.
We have a good podcast about the fear of missing out. And I think it's called just FOMO. And go take a listen to that if you're having these thoughts of like, oh man, all these people are going to be making so much money because things are down right now. Go back and listen to that. That'll help you refocus on this long-term goal. And like William said, it's time in the market. It's not timing the market. And this buying the dip, stuff like that, that's just getting an edge. But it's not the overall strategy. And you will be fine if you just invest consistently and look at a long-term perspective.
Yeah. And then just going back really quickly to hold, I'd say, long-term, you should just hold. Like if it's a good investment, something like the S&P 500 or, something you really believe in, then why would you sell just because it's cheaper? Like you wouldn't do that with anything else, right? So don't sell out of fear in something that's good. Just hold it for the long term. Because again, going back to like, if something goes down a little bit now, we may freak out about it, but just look at it long term. It's going to possibly grow to this. So it's okay. Don't sell now. Don't freak out. Just keep your money in there. It's kind of like, you just take a deep breath and stay in the boat, and don't jump out, as far as the long-term view.
Yeah. Well, I think we're right about time. So we appreciate you guys listening. We really enjoy doing this. We're going to keep doing this. Sorry about the week late. Usually we do this about weekly, but I was on vacation. It was busy, so life happens. But we're going to keep doing this. If you guys have any questions, please ask us anything. You can go to www.willandcody.com. And we've got a little ask us, contact us page there. You can also hit us up on social media, Facebook, Instagram, just direct messages. One of us will get it and we can either answer your question there or we might even answer your question on the podcast. So anyway, we appreciate you guys listening and we'll see you next time.
See you guys.